watching the European energy market outlook for the week starting 18th of August 2025. My name is Marcello Colax and I'm the Managing Director at Clever Markets. I'll be walking you through the charts in this video. Last week ended with quite a bold move lower on the TTF, German Power and NBP, resolving a lot of sideways ranges that have been in place for 6 to 8 weeks. So what happens next? Are we gonna bounce from here as the sentiment poll is telling us? Are we just continuing lower as the indicators are telling us? What's going on? Well, let's have a look at the charts. As always, whatever we see here is just my humble opinion on the market, and of course it is not an invitation to trading or trading advice. So this is the poll that we are dealing with at the start of this week. We can see that the bearish dominance from last week has now given way to bullish dominance expected for the week starting the 18th of August. This is in contrast with the bearish break below the ranges that we've seen all across the markets, but I think it kind of makes sense. So we might be seeing a smaller bounce. There's no certainty around that, but it's certainly a possibility. But our analysts still believe that with or without a bounce, eventual downside continuation still seems most likely. We are working with some really telling trigger levels that will tell us which way the market is most likely to go. And of course, we do keep an eye on the lower level time frames like the hourly chart, the 15-minute chart, to help us get a good early reading on what the market is actually doing. If you want a more detailed breakdown of the weekly sentiment poll, then simply subscribe to the newsletter. Link is in the comments below. All right. Let's get going. We can see here that on the TTF front month, we have had this sideways range since forever. And last Friday, we broke lower. Exactly the same happening on the NBP front month, where we got this break lower. The TTF front season break lower. The NBP front season break lower. Only the EUAs are still within their range, so they still have some room to decline before we get a clear bearish signal. German Power, we did get our very, very strong candle here, whereas on the Henry Hub, the market started to bounce, but you can see this is just a small corrective up move in an underlying downtrend overall, and nothing much happened on the Brent markets, and that for quite some time. Now, before I go into the TTF front month specifically, I want to share something with you. So I've noticed in my many conversations with energy traders that a lot of you don't even know who I am, what I do, what Clever Markets is all about. So I launched Clever Markets around 2 years ago with the goal to make technical analysis available to all European energy trading desks, because I understood that the legacy newsletters or the 1 or 2 day in-person courses, they don't really make technical analysis stick, and they certainly don't help you build systems around the many tools that are available to you. So that's where Clever Markets come in. We are partnering up with energy trading desks that are ready to fully implement technical analysis in their day-to-day decision-making process. We've been implementing our 3-part blueprint for hundreds of clients that are now better enabled to actually manage the increasingly volatile energy markets. And let's be honest, there hasn't been a good link between the fundamentals and the actual price action for quite a few years now. We are there working with you one-on-one to really make technical analysis work for your particular circumstances. Speculative as well as physical traders see equally good results, so we help speculative traders to identify trends early, to manage their risk, to help them with trade planning. For physical players, that includes TPIs, LNG players, big buyers, utilities. If you are ready to start buying below your reference price to optimize your energy budget, or if you're simply trying to make better decisions in any market environment, then that's where technical analysis and Clever Markets also comes in. We help you optimize the entire process. So if you are really serious about making this work and preparing your team for the decade ahead, then go to clevermarkets.com and connect with us. You can also simply send me a DM here on LinkedIn. We are truly democratizing technical analysis for the entire energy industry, and there's no excuses anymore for not making it work. Now, let's have a look at the TTF front month. This time I really want to start on the weekly chart because of course the weekly chart, we don't use that to make trading decisions, but to give us simply just a broad overview of where we are. So you can see in the grand scheme of things, we have been pushing lower bit by bit. We did have the occasional significant corrective up move from the 28th of April until when was this? The 16th of June. This was then followed up by 1, 2, 3, 4, 5, 6 weeks of a sideways market. That's the range that we are talking about on the daily chart in just a second. And you can see here our support level 1 is at 31 or near 31.07, which is, if we zoom out, this support area here going back to July 2024, which was then hit again in April 2025, and we just surpassed that. So we are at a really, really important support area that is more likely to break lower. Why do we think that? Because first of all, the MACD slowly starts to be picking up again, pointing lower. So that simply means that bearish momentum is increasing. We also see that the 8 and 12 exponential moving averages started to point lower. Once again, the bears are probably in charge. Also, we are not yet getting any sort of bullish reversal signal from the stochastic. Bullish signal would only be given with a move above 20, above oversold levels, like it was the case here. Didn't happen yet. So overall, still looking fairly bearish to us. We are then aiming for 27.85. I'm not saying that's going to happen from one day to another, but it is definitely in the cards. Okay, so now let's have a look at the daily chart. So here you can see this is like the big downtrend that we referenced on the weekly chart. This here is the 6-week range that we just talked about. And you can see while we were in this range, trend and momentum tools were pretty much useless. We didn't really want to use them because they're just giving us false signals. During these ranges, we mostly spent our time on the hourly chart to trade these smaller swings. Now look at that. We did push below the range last Friday. This probably had to do with how the market interpreted the non-event in Alaska, the meeting between Putin and Trump. Nothing really transpired, nothing new actually happened. So the camp nothing ever happens won out. The anticipation of the meeting probably kept the price elevated in the 32 area, but now that we know nothing is really happening, prices continue to decline. So now the question is this here just a false break and we continue higher, as the TTF sentiment survey would suggest, or is this the start of a full-on downside continuation? Well, let's have a look. We are first looking at the trend and momentum tools because we want to see them pick up as we are breaking lower. And we see that the 8 and 12 exponential moving average is pointing lower. Okay, so that kind of means that the trend is continuing. What's the momentum doing? So the trend tools are showing us if we're going up or down, and the momentum tools are showing us how strongly we are going up or down. And here we see that, okay, so the MACD is below its trigger line, so still bearish. Nothing crazy bearish, because you can see right now this could be just part of the range, but it is looking good for now. So it is pointing lower and it is picking up. Now, what else are we looking at? For me personally, the most important signal is the stochastic in this case. If we would get a move above 20, that would mean that we are most likely going to bounce on the price as well. Didn't happen yet. We are firmly bearish. So for now, the bears continue. What's volume doing? So if we start seeing higher volume on the break, that's usually an indication of the market being convinced of that direction. And you can see the market kind of pushed slightly above the average or the upper end of the average volume. So that's overall a sign of bearish conviction. So everything's looking kind of bearish to me. Now, how low can it go? So we do have a rectangle downside target established near 27.81. Seems to be a good target to me. Now, does that remind you of anything? Of course. Can you see on the weekly chart, we have the 27.85, more or less the same, which is a super important trough support that goes like 1 year back, right? So this means on multiple time frames, traders are looking at the same targets, which makes it more likely to be hit. Of course, do keep an eye on the psychologically important 30. Now, as we are declining, we are definitely gonna see the occasional uptick. This is completely normal and part of any convincing, solid, healthy downtrend. Now, what do we do with those anticipated corrective up moves? So I'm now on the TTF hourly chart, and you can see that we have been in this firm downtrend since the 31st of July. And you see, obviously, we are getting our swings, and now that we are at the lower end of this range, there's a chance that eventually we might hit it. We might get an upside correction before we continue lower. So what are the tools doing right now? We see that once again the trend tools, 8 and 12 exponential moving averages, are pointing lower, while the price is making lower lows and lower highs within the descending channel, looking all bearish to me. How bearish is the market? Well, the bears are getting like super enthusiastic. On the MACD, we are pushing well past the enthusiasm that was seen a couple of weeks ago on the 7th of August. So bearish enthusiasm is increasing as well. We also see that the volume is going up, but hey, it was the end of the session and it was the end of the week. So seeing higher volume at the end of a period is completely normal because a lot of traders are probably just closing out. So it is important, but not that important. So just one little piece of evidence that we are using as well. Then I'm using the DMI indicator, which consists of 3 lines. The white line is called the ADX, the Average Directional Index. And it's the first filter that tells us if we should look at the rest of the tool. So what does that mean? If the ADX is above 20, so here's the 20 line, are we above 20? Yes, we are above 20. So that means the market is trending. And then the next question is it trending up or is it trending down? Well, if the red line is above the green line, then that means the market is strongly trending down. Okay, so I repeat that. Are we above or below 20 with the white line? Above 20 means we are trending. Which way are we trending? We are trending bearish. Cool. Now, just in case you're wondering what would happen if we are below 20. If we are below 20, then the market is not trending, then the market is going sideways. And then we ignore who's on top because it doesn't really matter because nobody really is. So this is the first filter to identify if you should even look at that tool. By the way, it's also my filter to identify if we should look at the trend and momentum tools like the MACD and the moving averages. If we are below 20, then I say probably not. So right now we are trending, looking all good for the bears. So probably this little hesitation at the end of last week, we're probably continuing below 30.76. I think that's nothing crazy. We will see definitely the occasional push higher, which is in line with expectations. The bulls would only be in charge if we start pushing above the channel or above an important peak. You can see here this peak coincides with the channel boundary, so move above 31.9 something would probably put the bulls in charge, which on the daily chart would lead to an upside correction. But as long as we are here making lower lows and lower highs, we are still more likely to continue lower. Alright, that is all for today. I hope you found this useful. You know exactly where to find me. hello@clevermarkets.com. Everyone have a good start into the week. See you around and bye bye.